to provisions and events after the reporting period. Let's see what is the ask of this question. It is saying at what amount will the provision for restoration cost be measured. So it is asking for the amount of provision for restoration cost as at 31st December 18. So this is the ask of this question. Now let's read the question in full. So fluid company undertakes drilling activities and has a widely okay. So they have this policy to restore land after they complete their drilling. So there is a drilling commenced on a particular piece of land on 1st July 18. So they started drilling on 1st July 18. The estimated cost to complete the restoration once the drilling is completed is 3 million. The period is 5 years. They will be doing the drilling for 5 years. At the end of 5 years, they will restore the land. For that, they have an estimated cost of 3 million. The cost of capital is given 7% and the present value factor is also given 0.713. So we will calculate the present value of the cost, how much we will have. I mean, what is the present value of this 3 million? 3 million we will incur at the end of the 5 years, but what is the present value as of today? So we will take this estimated cost and we will multiply it by the present value factor. So we will get our present value of the cost. Then there is a cost of capital of 7%. So what we are saying is to be able to meet this 3 million of estimated cost at the end of 5 years when the drilling will end, we need 2.1 million of capital to set aside for that purpose. So there's a cost associated with the capital if we are setting it aside for some other purpose. Had we invested it somewhere else, we would have yield some income on that. So the question is saying, giving us the data that the cost of setting aside this capital is 7%. So we will take this present value multiplied by the cost of capital. This will be our cost of capital percentage. We will multiply it, so we will get this 149,730, which is our cost of capital. But here is a catch. This we only have 6 months here, no? Like the this period ends on 31st December 18. It begins on 1st July 18. So we have 6 months here. So this 149 is for full year. So we will divide it by two to get it for the half year, or alternatively we can multiply it. I mean, we can divide it by 12 and then multiply it by 6. So this is half year data. I mean, half year cost of capital, and present value we are keeping it aside for the full. So then this present value plus this cost of capital, 2213 865. So I think, yeah, the fourth will be the answer, 2.21 million. Okay.